When discussing Kenya's growth, it cannot be discussed in isolation. Looking at the growth of the global patterns, you see that Kenya's growth remains resilient, even through the global vulnerabilities. Looking at the global scene, you see that growth has slowed down and is expected to weaken in 2015, up to about 3.4% in 2016, and recover a little to about 3.6% in 2017. In the sub-Saharan space, where Kenya plays, you find that growth slowed down in 2015 from about 5% in 2014 to about 3.5%. And it's expected to pick up to about 4%, and then further in the medium term to 4.7%. However, Kenya's growth remains resilient, remains strong at 5.8% in third quarter of 2015. And at the end of the financial year 2015-16, it goes to 5.6%. But it's projected to grow to 6% in 2016 and to about 6.5% in the medium term. The strong growth is supported by all the sectors in the economy. You realize that Kenya is not a commodity-reliant economy. All the sectors altogether, there's none that holds more than 25%. So it's a multi-sectoral economy, and all the sectors support the growth of the economy. Tourism went down, especially in the face of terrorism and all the travel advisories, but it is picking up, and it's projected to continue growing and take back its position in really driving the growth of the Kenyan economy. This question can be answered, especially looking at the broader picture of the Kenya's development blueprint, which we call the Vision 2030. Now, in this vision, we envision that Kenya will become a middle-income country by the year 2030. And the Treasury has put in place the policy to develop particularly infrastructure, because Kenya's infrastructure was rather dilapidated and not sufficient to help in the economic growth. So we have put in place investment into major infrastructure projects, such as roads. We are building a brand new railway, because the other railway we have was done 100 years ago. So Kenya is building a brand new railway that is part of the regional plan to build a railway from the port of Mombasa all the way to the DRC. And all the countries along the railway are doing their part. So that's one of the things we have put in place. We are also developing all the major roads and airports in the far-flung areas of the country. This will help open up the interior so that we have easier transportation of the commodities, especially agricultural commodities, because we are mainly an agricultural country. So we'll have easier ways of transporting our produce, and this should help grow the economy. Kenya went into the capital markets for the first time in 2014, where we issued a $2 billion loan and later reopened it for $750 million. And we promised that we'll go back into the markets. We are not a one-time issuer. However, following the volatility in the markets and the decision of the Fed, which has been awaited with all the projections that it's going to rise, the spreads have been widening, but Kenya's bond has been trading tighter than its peers. However, now we cannot go into the market right away because of that, the widening spreads, because we do not want to tie ourselves to the wide spreads. So the factors that influence Kenya's capital market strategy include the ease of accessing the funds, the cost of the funds that are available. I think that's it. Yeah, the cost and the ease of accessing the markets. Yes. The challenges that Kenya would face include issues like lack of information to the investors who believe that Africa is one big country. They need to distinguish Kenya because Kenya really is different from the other sovereigns, different from its peers. Looking at the spreads even now, the Kenya spreads are tighter than the peers. And Kenya is unique in that while the oil price has really affected our peers, Kenya is not an oil exporter. So while the markets would be looking at Africa as the one big country suffering from low oil prices, Kenya is different because it has actually benefited from the oil prices, bringing the deficit down and reducing the current account deficit. So Kenya should be looked at as very different from its peers. And that would be one of the challenges, that we are viewed as the same and treated as the same. Kenya also needs to go out and tell its story and let the investors know that we are different. Now, the other issue that affects our markets, our going into the capital markets, last year, around October, November there, we had this depreciation of the currency, and that affects our going into the market because it affects our gross debt in Kenya shilling terms, because our shilling depreciated from about 98 to the dollar all the way to about 107 to the dollar. So that affects also our going into the markets.